Stocks are trying to firm up here over the last hour. Bitcoin's pushing back towards 48,000, but no one seems to want to buy the metals. Let's go to Scott Bauer, CEO of Prosper Trading Academy, of course, a regular here on the show. Scott, gold not quite getting any love. Silver definitely not. Is there any hope for either of these trades?
Well, I'll tell you what, silver is in, to me, almost no man's land right now. And if it can't hold this level that we're at right now, you're looking at $18, honestly. It is really breaking down technically, fundamentally. You've got to really look at this. And there's so much pressure because of the reopening trade. And have we seen peak inflation, right? So both of those really, really have a huge effect on silver. But Oliver, from this chart here, this is as bad as it gets, honestly. If it can't hold this, look out below. I have a lot better thought for gold than I do for silver.
Okay, so silver on the verge here of a major breakage. Gold, hope springing eternal somewhat?
Yeah, you look at here and maybe the talk of a faster tapering and rate hikes, maybe that's already baked into the market a little bit for gold. And I think for gold, the inflation issue is much more significant than what happens with rates here in the short run. So you look at gold and it certainly can't get out of its own way here, but it's kind of just been coiling. It's kind of just been, hovering back and forth. 1750 just below here is a pretty significant area. If it does break that, you're looking at 1680 is the next at the next level here. But I would, if I had to choose between the two, I would absolutely choose gold over silver at this point. And for those that may trade the gold to silver ratio, which is something that a lot of traders focus on, that's something you really want to look at here, because again, I believe that if there is a breakdown across the metal space, let's say, it's going to be a lot heavier in silver than it's going to be in gold.
Okay, so gold, if you squint, you can see some higher lows there on the chart. Obviously offset by a lot of lower highs too, but it does seem that even with equities getting a hit, gold relative performance these last 3 weeks, not terrible, right? We've seen worse for gold.
Absolutely, and that's my point. It should be a lot lower, you would think, from a fundamental standpoint, and it's not. And that's why I just have this feeling that a lot of what the Fed is going to announce and what their next moves are may be already priced in.
So tomorrow, what will tell us if that's the case, Scott? What are you looking for? Do you think gold will be something helpful to us? What are the assets we should be watching to make a determination on how this market feels about whatever is said by the FOMC?
I think you really have to look at the dollar first and foremost, because, the gold, silver, palladium, copper, whatever you want to look at here, again, I think it's more about inflation and the virus than it is what the Fed does for the metal space right now. So I think you really have to look at the dollar and what the reaction is to what the Fed does, and that'll give us a pretty good indication, I think.
Okay. Scott, in terms of the bond market's relationship, gold generally, on days where yields are down, it does better for the most part. Is that where we look to kind of see what the trajectory here could be long term if yields finally do wake up? Is that kind of like the nail in the coffin here for gold? Because it seems like this yield curve flattening, it doesn't have too much of an issue with.
No, it really doesn't. But the bond market is pretty confusing right now also, Oliver, because if the Fed really is kind of, accelerating this taper, putting on the docket for a couple of rate hikes next year, which if you look at the CME FedWatch tool, they're actually pricing in pretty decent chance of at least in June, if not earlier, of a hike. You would think that bonds would be selling off more, and they're not. I'm really surprised that we're seeing this 10-year, just struggling at the 143, 144 level. I would have expected it upwards of 155 to 160 at this point. So to me, that's a confusing market as well, but we'll get some clarity tomorrow. At least I hope we do. If we don't, that's going to really hit the markets, I believe. That's going to hit the equity market. I think the market is just looking for clarity finally tomorrow. And if the decision is, yes, we're accelerating the taper, yes, we expect to hike rates, 1 or 2 times next year, then yes, I think the market has that already priced in, and we could take off from there. But any uncertainty, not getting that clarity, to me, is not good for the overall market.
Okay. 10-year right now, 143. A chunky range that we've been dealing with. This thing just can't break free of the year-to-date highs in the yield. Thanks, Scott. Good chat here.
Thank
Gold,
you, Oliver.
silver under pressure. Gold a little preference, technically, according to Scott.